You're listening to the Productive Therapist Podcast, the world's greatest and most brilliant resource for busy therapists who'd rather be laying on a beach in Hawaii. Each episode is packed with simple tips and inspiring insights from the Productive Therapist team to help you grow your practice and have fun doing it. So without further ado, let's help you get more done and have more fun.
Hello and welcome back to the Productive Therapist Podcast. I'm so glad you're listening today. Today I had a chance to have a round two conversation with my good friend David Frank, and he's a financial planner for therapists. He's also the founder of Turning Point Planning. Great guy, very smart guy. He helps therapists organize, optimize, and protect all their financial resources, including their practice. He provides the confidence your finances are on track so you can focus your time and energy on what matters most. But don't let his love of the tax code and spreadsheets scare you off. You're just as likely to find him with his nose buried in one of Pima Chodron's books as reading up on the latest financial planning techniques. Hope you enjoy my conversation with David Frank. David, welcome back to the podcast for the second time.
Thanks. I'm excited to be back.
Yeah, you don't get the jacket until the fifth time, but on the second time, you definitely get a mini trophy. Yeah.
Oh,
so look out
nice.
for that.
Yeah, I'll definitely be watching. Yeah, I'll be watching for that package. I'm very excited.
I'm kind of joking, but I should probably do that. That would be kind of fun to like send out like stepped gifts for like people who are good enough to come back on the podcast.
Yeah, or maybe even like just like a little like badge I can put on my website.
A badge, yeah, exactly right.
Multiple guests.
Like people put on their website featured on the New York Times or whatever.
Yeah, exactly. Yeah, for the featured section.
That's not a bad idea. I like it. Well, I always love talking to you, and we tend to talk about a lot of different things, but it usually comes back to business and finances. I mean, that's your lane, and I actually really love talking about money and business. So it's like we always have a good time chatting, don't
we? Likewise, yeah. Always a pleasure.
So much so that we're like, what do we want to talk about today? Okay, we have 10 things we want to talk about. But as we're recording this, it is basically tax season. Fortunately, my taxes were done quite a while ago, which I'm very glad about. But we were chatting about like tax tips and things for therapists to think about, whether they're solo or group during this time, and actually throughout the year. So I would love to throw that topic around with you and hear about what you are, kind of some of the tips that you share with your clients about being prepared and being smart about taxes and money. Yeah.
Yeah. I mean, it's as if money isn't sort of triggering enough, right? Like we all have stuff attached to money, and it brings up, just like a lot from our past, family of origin, all that. There's a lot of hooks that money has. And then when you pull taxes into the mix, man, it's rare to talk to a business owner, not just therapists, but business owners in general, who hasn't gotten caught off guard at some point along their business ownership journey by the tax gremlin. Like something happened that they didn't expect, and all of a sudden it's like, holy cow, what is all this money? It's, for solo practitioners, taxes are almost certainly going to be your biggest expense. For group practice owners, it's almost certainly your second biggest expense behind payroll or compensation for your staff. So it's a huge issue. And I think, I'm a financial planner. I of course specialize in working with therapists, both solo practitioners and group owners. And so, but I'm not a tax professional. And this is a confusing and important point too, I think, is just understanding the different types of professionals that you're working with. So I don't prepare taxes. So my clients need to have another solution. And I almost always recommend they do get a professional to prepare their taxes, because when you are in business for yourself, and that's what private practice owners are, of course, is small business owners, taxes get really complicated, and it is so easy to screw things up. So I love collaborating with those tax folks. I love reviewing tax returns. I mean, because there's something deeply wrong with me because I like that kind of work, but like it is like, it just sort of scratches some itch for me. And it's really important because, like it's easy to make mistakes. And there's just a lot of complexity and a lot of assumptions and a lot of, what's the right word to use? The tax professional that you work with, they bring their own set of assumptions and sometimes biases into how they prepare taxes. And what's interesting is that doesn't always line up with what their client or our mutual client might
That's interesting.
Agree with.
Right.
And so I think like the most important, if listeners walk away with from this conversation, remembering just one thing, I think the one thing that I would like everyone to remember is that your tax professional is sort of like not the end all be all of taxes. And that what I mean by that is like, just don't dump everything on them and just be like, just take care of it. I don't even want to think about it. I don't want to hear any of the assumptions that you're making. I'm not going to ever push back on any sort of tax treatment or tax deduction that you kind of like reject or think I shouldn't take. I think like understanding how they're thinking and just knowing that I can guarantee you whatever opinion your tax professional is giving you, you can find another qualified tax professional who has maybe just a slightly different opinion, but like can give you a different answer. Because a lot of this stuff is subjective. So it is complicated. And anyway, this is just like, it's important to be kind of informed. You don't need to be a tax expert, but you need to have kind of like the right team of professionals working with you to help you best navigate this kind of potential minefield and navigate this really big expense that's going to have a big impact on your lifetime after tax earnings.
Sure. I'm glad you brought that up because it's an interesting point that tax professionals are, to some degree, they're interpreting the tax code and then applying it to your business and your particular situations. I have always tended to defer to the professionals because, especially when it comes to my CPA and bookkeeper, because I genuinely don't have knowledge or expertise in that area. Sure. But I've also been fortunate to have good CPAs who I don't think I've ever had a disagreement with. And they've, for the most part, explained things to me, which is helpful. Like if you don't understand something, ask, right? Because you should at least understand the logic behind what's happening or like the concepts behind what's happening. So I guess what you're saying is ask questions and don't be afraid to understanding that that's their opinion and that's their particular approach to your tax situation.
Yeah, I think ask questions is exactly right. And I actually encourage folks just to ask questions, even if you have a very strong suspicion you will not understand the answer. Like that's okay. Like that's kind of how we learn. But actually, I have like I think this is kind of an interesting story just from yesterday around this very topic. So I posted on LinkedIn yesterday and I just said, hey, it's tax time. Let's make sure that we're making the most of our business tax deductions so we can reduce our tax bill and keep more of our hard-earned money. One of the ways we can think about doing that is considering whether your personal therapy is a deductible business expense. And so I kind of explained my rationale. And I think in a lot of cases, it can be, it's not a slam dunk. Like you need to think it through, be cautious, so on and so forth. But consider it. And wow, did I get a lot of opinions on that post.
I'm sure
most of the
did.
Opinions, not from therapists so much, although a couple of therapists commented, but it was mostly from my peers that are financial planners or tax professionals or bookkeepers. And it was just pushback. It was just like, man, I don't think that's right. Like, I don't think you can't do that. There's a bookkeeper who said I could see how you maybe would do it, but man, I would never recommend one of my clients do it. And so I'm going over the course of the day and I'm just like, oh man, did I get this wrong? Am I thinking about this wrong? Maybe that's just a super aggressive tax move that could trigger an audit or something like that. I don't know. And I'm going through the course of my day and I got a notification that another friend of mine who's a CPA, he also commented. And I was just like, man, you know what? I'm not even going to look at that right now. I can't psychologically handle someone else telling me that I'm wrong and I have a bad take here. And when I finally looked at what he posted, he was like, interestingly, there was a court case about this a long time ago, back in 1980. But there was a court case, a tax court case. It went to trial. And the court found in the therapist's favor. And they said that we find that the cost of psychoanalysis was deductible as a business expense for a clinical social worker, I'm quoting from the ruling right now, based on the rationale that a deeper self-understanding contributed directly to an improvement in a therapist's diagnostic skills.
Wow.
So it was just personally, that was very validating for me, right? Because it's just oh, well, there's a court case that agreed with me. And it's an older court case. There might be other court cases out there that have refined this, but the point is that most tax professionals that I'm aware of are like very skeptical of this idea. But then there's at least one court case where it's been litigated and the rationale is sound, and it was approved. So the point is that, just because you get a hard no, or there's a lot of pushback, or your colleagues disagree with it, it doesn't mean that it's necessarily wrong. It might be a more risky tax move. And by risk, I mean, it might, you might get pushback if and when you were ever to get audited. And then you get to decide, like, okay, how aggressive is this? How willing am I to kind of like take a risk that I get an audit or audit pushback to get this tax deduction?
Right.
So I just think it's important just to realize that different professionals will have different takes. And just because you get really strong pushback doesn't mean that you should automatically rule something out.
That's a good story. Thanks for sharing that. I had no idea about that court case and that precedent that was set all those years ago.
I didn't either. I was like, I had no idea. So like, I think that's what I encourage folks, like, especially around some of like these more, I don't want to call them controversial deductions, but I'm sometimes surprised how conservative and cautious tax professionals can be. And let's be honest, us finance and accounting types, we tend to be a little bit more
play by the rules
and cautious. Yeah, play by the rules. That's just the type of personalities that get drawn into this field. So I think it's important to remember that. But when it comes to like the home office deduction and deducting personal expenses, I call things like shared expenses. Like they're kind of an expense from your personal life, but the reality is that they at least partially are supporting your business. So personal therapy, mobile phone bills, internet service provided at home, stuff like that. You need to be sure to follow all the rules, but a lot of tax professionals would just be like, absolutely not, stay away from that. Right. You can't do that. And what I encourage folks to do is just say like, okay, I understand what you're saying. Can you just explain to me what your thinking is behind that? Like, what are the actual tax laws? How do you interpret them? And sort of like, how do you reach that conclusion? And if you really like want to get bonus points, you can then ask, like, has there been any court cases about this? Like, are you aware of like what precedent is coming out of the tax court that might influence it? Now, like not everyone's going to want to have that conversation, but just again, to illustrate, there's a lot of gray area when it comes to taxes.
Right. Do you think that a lot of small business owners, and talking about therapists here too, don't deduct enough of what they should? Which side of the coin do you think people tend to fall on, like deducting too much and being a little bit too, whatever the word is, generous with that, or not really making sure they deduct all their business expenses like they should?
I've seen it's kind of all over the map. I think it kind of depends on your personality, but I think in general, what I notice is that earlier in your journey as a business owner, as a private practice owner, like when you first start out your solo practice, I tend to see folks being overly aggressive with some deductions. They'll be like, I deducted all the clothes that I bought. Like you just can't do
right.
that. The rules are like they can't do that. Like big car deduction or vehicle deduction. You can do that, but you have to be really careful and follow the rules. And so like in the beginning, it's just like, I'm just going to throw some of these deductions in there. And I think sometimes folks are actually making very aggressive tax moves without really realizing. They're just like, I think this is probably okay. So I think that happens in the beginning. You probably learn over time as you work with your tax professional, like, okay, what are the rules? What can and can I do? Like, what are the clear yeses and clear nos?
Right.
But then I think especially if you transitioned into growing a group practice, starting a group practice and growing it, I think there tends to be a point where there's under deductions taken. Like they're not being creative. And creative maybe is the wrong word, but like just not being complete enough. Because there's a lot of different things you can do. Like I wish there were a magic wand where we could just say, hey, we're going to do this one tax strategy and it's going to save you tens of thousands of dollars. And occasionally that will be the case. Sometimes it happens, but more often what it is like just being really complete about making sure that you're tracking all of your business expenses, that you're making sure you're making the most of what I call those shared business expenses, which are, expenses you probably think of as a personal expense, but again, like you could structure it in a way that it is legitimately a business expense and therefore a deduction. So I think it's just sort of like thinking through with your tax professional, thinking through with your financial planner, what can we do this year over the course of the year such that when we get to next tax season, we're in like a little bit better spot.
Absolutely. So many thoughts I'm having as you're talking about different ways we could take this, but I wanted to tell you about this because it's kind of funny to me, and I learned from this. But I have a colleague here in my area who I used to share office space with, and I learned a ton of great things from him, both clinical things and business things. But I noticed over time that he was very generous with his tax exemptions or his tax deductions. Like he would buy furniture for his house and then write it off on his business, a tax return.
Yeah.
And his logic was, I'm just a small fish. I'm not going to get audited. And I thought, note to self, that's probably not like, the best way to go. Not the safest way to go for sure, right? Because that's definitely stretching what is probably appropriate. So I thought that was interesting.
Yeah, and I know folks too, not even necessarily therapists, but like other folks that I just, I'm friends with or whatever, we get on this topic and it's just like, man, like I don't save receipts. That's too much work. Like what are like, I'm not going to get audited. Like there's just no chance.
Yeah.
Like, well, for most people, it's a pretty low chance that you get audited. But like, if you do get audited, the IRS is not going to assume that you've got legitimate business expenses. They're going to need to see some validation and some proof. And, if you've taken a little bit too cavalier of an approach, you could very possibly get away with it and just live the rest of your life and be like, I did it. I beat the system. But if something happens, like it could be really painful.
Right.
So I've borrowed this expression, but I encourage folks to pay every cent they owe in taxes, but not a penny more. So like, let's make the most of it, but like, let's follow the rules. The rules might be a little unfair. Right. We might object to them, but like they are the rules, and let's just follow them. Like you were saying earlier, I'm a rule follower.
Yeah. And your point is well taken, because it's better to do things the quote unquote right way, just in case. And also so you don't have to worry about it coming your way. I think I might have talked to you about this before, but I had a payroll tax audit a couple of years ago from the state of California, within the state of California. And it was gnarly. I'm telling you, the things that they required and asked of me going back 3 years, and like detailed documentation for absolutely everything. And fortunately, between my payroll software company and my the systems that we have in place and the tracking that we've had for payroll, I was able to give them absolutely everything that they needed with all the details. It was literally at least 100 to 200 documents. It was absolutely terrible, but I passed. No judgment, no penalty. And I was very grateful that I had the ability to hand everything over. And if I was in the situation where like something important was missing, or a big chunk of the information was missing, that's not a good place to be. You don't want to be there. Yeah.
That just like jogs my memory. Another area of tax risk that folks might not always think of as tax risk is the whole independent contractor versus employee distinction. For group practice owners. And it's just that's an area to be super cautious. You almost can't go wrong if you choose to go down the W-2 employee path. That's the more conservative approach. If you go down the contractor or 1099 contractor route, that isn't necessarily wrong, but just make sure you really understand the rules and work with a good employment law attorney that understands your local and state regulatory sort of environment.
Yeah, I was actually just reviewing that the other day. You and I are both in California, so it's a little bit different here than it is other places. But and I won't share the context of why I was doing this, but I have all W-2 employees. But in California, you really are hard pressed to use contractors for your business at all. I mean, you really have to follow like a strict set of guidelines. And one of the ones that I read was that, and this was from the 2020, I think it was a new law or a ruling of some sort, basically said that you cannot use contractors in your California-based business if they're performing the task that is your core business, basically, right? So,
Right.
in other words, like I cannot hire a contract therapist
Yeah.
unless maybe I'm hiring someone to do psychological testing. There's some like fringe areas like this is not our core service, but we need it done, but it's not likely that that's going to happen very often.
Yeah. And for any psychologist listening, there is like a carve out for psychologists. It's a little bit of a different standard.
Mm-hmm.
And so I've talked to some people that like, oh, like I'm a psychologist, so like none of that applies. That's not true.
Well,
like, there is still a pretty high standard. In most cases, you're probably like getting like you going the contractor route for like a group practice that's all psychologists. You have a little bit more leeway, but it's still pretty challenging to make sure. And there's still a lot of rules. Like if you go the contractor route, be sure you know what you can and cannot do. Otherwise, if and when that state payroll audit comes, it's going to suck.
And I will tell you that the one thing that they were looking for the most was if I was misclassifying workers. That was like the number one thing. And I was so happy to be able to say, I have 0 contractors.
Yep.
Like, I mean, maybe my business coach, bookkeeper, but those are just business services really,
Right. Yeah. That's very different. Like outside service providers, of course, those are contractors. That's,
Right. So let's switch gears real quick, sort of, and talk about like best practices and best tips for somebody starting a solo practice. And I was telling you earlier, one of the therapists in my practice just launched from my group practice to his own solo practice. And so I've kind of been coaching him a little bit on the side and advising him, so to speak. I'm not a tax professional either, but, we talk about simple things, and it might almost sound too obvious to state, but like have separate business account, like have separate bank accounts for your business and your personal assets. And then also for everything that is a business expense, I think it's a good idea to get a business credit card and use that. Certainly could be a debit card, right? Yeah. Keep all those things in one place, all the business expenses and the business finances in one place. And the biggest thing that he was asking me about was like, how much do I save for taxes to be safe, right? Yeah. And I told him to consult with a CPA, to be honest, because I don't, and also to look at like profit first percentages. That's helpful, right?
Yeah.
But what else would you advise for someone like him starting a private practice for the first time?
Yeah. So you already hit on like one of the biggest and most important tips is to have separate like accounts for the business, and use them. Be like very diligent and very clear about like, is this a personal expense or is this a business expense? And it's okay if those terms are a little confusing in the beginning, because like it can be, but try to educate yourself and understand like, okay, does this relate to my business? Like, would I be spending this money if I didn't own my private practice? Like if the answer is yes, I'd be spending this, even if I weren't a private practice owner, well, then it's probably a personal expense and put it on your personal accounts. And the reason that's so important is that if you have an incorporated business entity, an LLC, professional corporation, therapists sadly cannot use an LLC in California, just a little side note there. But if you have one of those, you absolutely have to have separate financial accounts and never pay personal expenses out of those accounts. It will kind of ruin some of the protections, or potentially ruin or compromise some of the liability protections that your incorporated business entity offers you if you intermingle personal and business. So definitely do it. But even if you don't, even if you start as a solo practitioner, say in California, and so you're just going the sole prop route, which is pretty common, still just use separate bank accounts. And the reason is because it's just going to make everything so much easier. Like I was just working with a client the other day, and it's just like there's expenses commingled, and that's okay. You don't have to do everything perfect right out of the gate, but moving to get things more cleaned up, it will make everything in your life so much easier. Because when I think about sort of the big financial fundamentals for any practice owner, it's sort of like having a budget, having a bookkeeping process, having a tax preparation process and tax saving strategy. And then the fourth is having a profit distribution practice. And I'll explain a little bit more about what I mean with each of those. So a budget is just something, it's just a best guess of how much money you're going to be making this year, how much revenue is going to be coming in the door, what are my expenses that I need to pay for from the business, and then what's left over as my profit. And that's really your profit before taxes. So that's all a budget is. It doesn't have to be this big complex thing. I actually just recently wrote a blog post on that, just like how to begin thinking about budgeting. So have a budget. So just have an idea have a best guess, a guesstimate, if you will, of how much money you'll be earning from your practice. The second is having a bookkeeping practice. So just like have a way to keep track of your expenses going out and the revenue that's coming in. And here's the great thing about having those separate financial accounts is, especially when you're getting started, you're probably going to fall behind on your bookkeeping. You're not going to know how to do it. You don't necessarily need to use something as fancy as QuickBooks. Like you can do something as simple as just using a spreadsheet like that. That's totally okay. But you probably fall behind at some point because as a new business owner, you've got a lot of things to take care of. If you have separate financial accounts and you don't have personal expenses mixed in there, you can just go and download the transactions from your bank account and your credit card, and you pretty much have got everything. Not perfect, but you got pretty much everything. And then like setting aside money for taxes. I think that's so important. Like the general guidance I give for folks starting out is just assume that whatever your profit before taxes is, assume that you're going to have to pay 30%. So 30 cents of every dollar of profit that you have. So that's after you kind of deducted or subtracted out all of your business expenses. That's a reasonably safe number. That's for people like in California or New York, other high income tax states. If you live in someplace like Texas or Florida, where there is no state level income tax, you can reduce that number to maybe 25%. But like that's a good rough number to use starting out. Definitely like seek out a tax professional if you want to get more granularity. But I think that's the biggest way folks get in trouble in the beginning is just not realizing how high their tax rate is going to be. And then the last piece is sort of having a profit distribution practice. And what I mean by that is that, have intentionality when you go to take your profit out of your business accounts and move it into your personal account so that you have money to spend in your personal life, which of course we all need. Just don't do it sort of willy-nilly. Don't just say like, oh, I need a little bit more money to pay this credit card bill or whatever, and pull it out. Just be very clear that like, okay, here's how much profit I have left over after I've set aside for my expenses, after I've set aside for taxes. And then just like, once a week or twice a month or once a month, you take, what is, your profit after taxes and move it into your personal account. There's different ways to do that. I think Profit First is a great system. Of course, Julie Harris from Green Oak has got a book called Profit First for Therapists, which I tell everyone, even if you never intend to implement Profit First, read the book. There's so much valuable information in it just to think about it. So that those are kind of the fundamentals from a finance
really
and accounting perspective.
That's super helpful. Thank you. Yeah, I was literally having this conversation with the therapist that I was mentioning earlier, and he had heard different things from different people, and he thought like maybe it's 30%, maybe it's 40%. But the important distinction there is what you said is really helpful. 30% of profit after expenses, because if you save 30% of your gross revenue, you'd be saving too much, which is,
Probably.
That's not a problem, but
it's not a problem.
It's not necessary. Yeah.
It might create problems for like the sustainability of like your life, but from a tax saving perspective, you're probably in good shape.
Yeah, that's good. I love the 4 times a year that I do the quarterly profit distribution. It's just like the most fun day. And we on the personal side, I have my wife asked me how many bank accounts I have the other day. I was like, I think it's like 15 because I, have personal accounts and then 2 businesses. So it's a lot, but I transfer the profit distribution from my business account to our, we have a special savings account for home. It's actually for travel and like, home remodel projects, stuff like that. This year it's going to a trip to Europe. So that's super fun.
Nice.
Yeah. It's nice when you have a business that pays you well. That's a bonus.
Yeah. And I mean, and you probably didn't start out that way. Just like businesses don't start and like the systems aren't set up. It's a lot of work to build these systems. And it's not tons of work to maintain them and use them, but it is work. Like having, like this is part of being a business owner is setting aside time. This is other big tip. It's just like put on your calendar, like a time at least once a week where you're like, what I'm doing with this time is the finances and accounting, the money stuff related to my private practice. Because that, like, as a business owner, that is just like a big part of your responsibility. And the more you invest time and knowledge there, the better returns you'll have over the long term.
Yeah, that's good. I think a lot of people still don't look at their money and look at their finances, and they're scared to do so. I mean,
Well, yeah.
I enjoy it. You enjoy it, but we're nerds in that way. So
Totally. And like that's okay too. Like sometimes in the beginning, like if like money is super overwhelming and like maybe you haven't done taxes for a couple of years or haven't done bookkeeping or things are just, you feel like things are a little bit messy or sloppy or whatever, of course there's going to be anxiety and you're going to have some big feelings about it. If you find yourself in that spot, what I encourage folks to do is develop like a daily money practice. So like really make it part of your daily routine, but just like a couple minutes in the beginning, like 5 minutes or less. 5 minutes or less, and all you're going to do is pick something, log into your bank account, open that notice from the IRS, whatever it is. And so like, this is really just kind of like exposure therapy, right? Like, it's just like, you're just showing up, you're being present, you're engaging in the thing, you're noticing what sort of like emotions come up in you and just like realizing, oh my gosh, I didn't die. That wasn't fun. It wasn't pleasant perhaps, but like didn't die. And then, if it gets to be too much or the 5 minutes are up, sweet, you're done for the day and you'll do it again the next day. And just sort of like to slowly move into something rather than thinking, I'm just going to wait till I have a clear day and then I'm just going to do it all. Like,
yeah, I like that.
We can never do it all, right? Like that's just like, it's very difficult. It's very difficult to do much of anything that way.
That's a good suggestion. Yeah. To wrap up, it would be awesome to just chat briefly about the ideal sort of partners to work with, tax-wise and just financially speaking, for a growing business. And maybe not on day one. You don't need all these people on your team, so to speak. But like for me, I've been in business for many years. Who would you recommend that you surround yourself with as you grow your business?
Yeah, so having a good tax professional, I think, is probably going to be your first order of business. So that's
right.
Going to be someone who can prepare your taxes. So that's either a certified public accountant, a CPA, someone who has the enrolled agent or EA designation, or is a tax attorney. But usually it's going to be one of those first two. So that's someone that can put your taxes together, file your taxes with IRS and state taxing authorities, and can importantly also represent you to those authorities in the event of an audit. So having a good person there is really, really helpful. And if you don't have one, I always suggest interview a handful, talk to a couple different people, understand their approach, ask them questions, see what it's like to work with them. Do they give you answers that are nonsensical that you just can't understand? Or are they really good at being patient and explaining? So just find someone in your corner there. The other part is going to be getting bookkeeping services. Like sometimes CPAs and accountants will offer bookkeeping, but not always. So there's two different functions there. You can do your bookkeeping yourself. And in fact, when you first start out, I really kind of encourage people to do their own bookkeeping just for a little bit, just so you can kind of understand, oh, this is how it works. Oh, it's not actually that complicated. Software like QuickBooks, pretty complicated, but like you don't have to use that. So like you can eventually outsource that to someone, but if you've done it a little bit yourself, you kind of understand what it is you're outsourcing, which makes it much easier for you to manage. So I think those are probably the two most important pieces to begin with. And then at some point, I think also getting a financial planner who's going to take a holistic approach and actually help you look at your business, help plan your taxes can be really important. And that's something that I do for my clients as well, because like I can act as an intermediary between what's happening in your financial life and what's happening on the tax return, and making sure that everything is accurate. We're not overlooking anything, that not everything is mischaracterized, like, because I can ask and I'd be like, hey, this form 8606 isn't here, like, I know that needs to be there. The average therapist isn't going to know what the heck that is or whether it's missing or not missing, right? Like, nor would I expect anyone to. So having a second set of eyes that will be willing to look at your bookkeeping, look at your taxes, can be really invaluable to just help make sure that nothing is missed or kind of screwed up. Beyond that, from a financial perspective, I think like that. I think those are the obvious ones. Do you feel like there's anything that I missed or you would recommend?
No, I think that makes sense. Yeah, I really appreciate working with a good bookkeeper and a good CPA and a good financial advisor. I think that's amazing. this is less on the business side, more on the personal side. Yeah, that's correct. But we recently started working with an estate planner to actually, we put together, finally put together a proper living trust, like the real deal. It's like huge. The thing is huge, but there's another box to check to just kind of feel like we're really in a solid place across the board, business wise and personal wise. So that's something to think about too.
For sure. Yeah. So like a comprehensive or holistic financial planner will also help you navigate that element, the estate planning process.
Oh, that's good to know.
But so like that's estate planning is part of the certified financial planner curriculum. And that's a designation within the financial services industry. That's the one that I hold, the CFP designation. So estate planning is a big piece of that, but you want to make sure financial planners will kind of make sure that all the different pieces are kind of working together, but you'll almost certainly want to engage an estate planning attorney in your state,
right,
to help you execute and create that plan. Although I will say that there are increasingly technology solutions out there. In fact, my own financial planner was like, I'm like, hey, I have to update my estate planning documents. And he's like, oh, there's this, I'm using this new AI tool that'll just do it. You don't have to. And I was just like, okay, maybe like. We'll see. I feel like the jury's out.
You're like, don't test it on me.
Yeah, I'm like, I really liked the estate planning attorney that I worked with, so I might just go back to her. But we'll see. But there are options there. But having attorneys as well is important. Like, if you're a group practice owner, having an employment law attorney that you can consult with really helpful. It always doesn't have to be an attorney. There are also like HR sort of consultants and services out there that are going to be cheaper than just going to an attorney in most cases. So there's some good options there.
That's great. I think, the thing that I appreciate the most is, even though talking about and working on these aspects of business and personal life they're not the most fun things to do for most people, but when you pay attention and you have sort of systems in place to make sure that you're doing things the way you should be, it's a good feeling of confidence that you are, you're checking the boxes and you're safe and secure, and you're just it's a good feeling once you get all that kind of lined up.
Yeah, it is. And it's work. This stuff is work. It's not fun. I will say like many things, the most painful part is before you begin. Once you kind of begin and start diving in, most times it's like, this isn't necessarily fun or the most pleasant, but like, it's also not that bad.
Yeah. It's usually a heavy lift in the beginning, but you're right. It gets a lot easier, especially if you're working with other professionals, they do most of it for you.
Exactly.
So it's like, that's the
you don't
nice
have to do all this stuff alone. I think that's an important investment to make. It's just like, sometimes it's just sort of like the partnership and the accountability piece that can pay the biggest dividends.
Yeah. The next thing I need to work on is a contingency plan for both of my businesses. Which, like, back in the day, I had a professional will for my solo practice, and I was pretty proud of it. I worked hard on it, and but it's way out of date. And like, if something was to happen to me today, all the responsibility for figuring out what to do with my business assets and my employees and all these kind of things would fall on my family, really. So I'm going to be working on that pretty soon to put together something for every eventuality. Right? That's it.
That stuff, that is hard. That is really hard. And that, especially that type of planning, I tell everyone, and this is something I work on with clients too. It's just like, okay, yes, we need to do this. Let's put it in the appropriate order. It's not going to get done overnight. It is not going to be something that you sit down and do once. What I encourage folks to do is just like notice what activities and decisions you are making as the business owner, and just like keep a running list. Like, hey, every day, this is what I do. This is what I do. And like, becomes a living document that gets better over time. But yeah, it's just hard to think that through, like that type of operational planning, planning operations when you're not around to be able to do something. It's hard work. It's just really hard work.
It's also like adulting level 110.
So much adulting. That is hardcore adulting.
It's like, should I watch Netflix or work on my contingency plan? Okay. Tough decisions.
Well,
thank you. Gosh, thank you so much for all this. I feel like we packed a lot of good stuff into another episode, into round 2. We might have to come back for a round 2 at some point and see if David will earn his crown. I made that up. Trophy, crown, jacket. I don't know. Maybe crown should be at the end. I don't know.
I kind of want, you brought up jacket. I kind of want a jacket now.
Right? Yeah. I'll get to work on that.
Awesome. Well, it's been a pleasure. This has been super fun. Always
Absolutely.
happy to chat with you.
All right. Take care.
All right. Thanks.
That's it for today. Thanks so much for joining us. If you enjoyed this episode, please leave us a review and hit the subscribe button to make sure you never miss an episode. If you're looking for more personalized help, you can reach us through productivetherapist.com. Thanks so much for listening. We are Productive Therapist, and this is the podcast that helps therapists get more done and have more fun.